In this episode of the Construction Lending Podcast, we welcome a mortgage industry veteran, Jennifer Goldsby, the VP of Renovation Lending at Diamond Residential Mortgage Company. Jennifer, also known as the Reno Gal, will discuss the critical aspects of communication, knowledge, and customer service in renovation lending, and shares insights on utilizing programs like the FHA 203K to turn properties with potential into dream homes while playing smart on finances. We also look at the importance of promoting renovation financing options in property marketing and how first-time homebuyers can benefit from renovation programs.
What are some of the things that people need to watch out for, kind of as they're putting together a renovation loan, or some red flags of like, hey, this is probably a good fit or not a good fit? How do you think about that?
We kind of rely on the agents a little bit.
You mentioned like, hey, we don't refer contractors. Why is that?
The liability. Sometimes you've worked with someone for years and they've been consistent and dependable and you know that they're quality, and then they have some sort of life event. And before you know it, everything's changed.
What makes a lender successful having renovation programs as part of in their tool belt of loan offerings?
Something that I've seen with successful shops is that there's buy-in from the top down.
Welcome to the Construction Lending Podcast. I'm your host, Sean Ferris, and today we have a special guest with us, Jennifer Goldsby from Diamond Residential. And Jennifer has an amazing background in the renovation world. And, first and foremost, Jennifer, welcome to the podcast.
Thank you. It's good to be here.
Well, as we dive in, I'm really excited about this because we get to talk about one of my favorite subjects, and that's, renovation lending. And, I'd love to start this off by just getting a little bit of a background about, you and getting into renovation lending, and just tell me a little bit about that.
My origin story. How did I get into this mess?
Origin story.
Yeah, so my husband and I, we were trying to buy a house, and the process was not fun. Back in those days, you didn't have the internet, right? So you'd pick up a Homes magazine at your local grocery store and flip through it. If you saw something you like, you contact the agent. And, we had a horrific experience trying to purchase our first home, which is what got me into the mortgage industry to start with. I looked at him one day and I was like, this is the biggest investment we're ever going to make. I cannot do this until I understand more about it. And I asked, what would you think if I switched careers? And he said, whatever makes you happy. So I started originating loans with a broker shop that went out of business shortly thereafter for all of the illegal and unethical practices that they were doing. And I thought, this is insane. So I did some interviewing of my own, and I ended up working for a gentleman by the name of Corey Perez, who now works for the Portage office of Diamond, and he taught me everything he knew. And then a few years into it, we're approaching at that time, the housing crash, right? And we're all like trying to survive. And, those first few years in the mortgage industry, they were tough for me. I remember my first W-2 was like $11,000, and I got it and I cried. And I was like, what am I doing? But it was something I believed in and something I loved. And I was like, okay, something's got to give here. I got to do something different, because I can't keep going on like this. And so out of, I would say, pure desperation at that point, I started looking at other things being, I was really, really interested in the 203K program. And I had met people. There was a title rep who bought his house using the 203K program, and he got it, dirt cheap and made it his own. And I was like, how did you do that? And here I am, the lender, the loan officer. I'm asking a title rep, how did you do that? So I started taking as many courses as I could to learn the program. All rigs back then used to have a training program. And, after researching it a little while, I started to talk about it. One day I was in a realtor's office, and they asked, do you do 203K loans? And to be honest, on paper we did, like we said we could, but we'd never done one before. And I was so broke and I was so desperate. I was like, yes, we do. Yes, I can. So I'm like, I was real super transparent. I've never done one before. I know we can. But if you'll bear with me, we'll work on this together. That first loan I closed in 21 days, in 3 weeks.
Wow.
For first-time home buyers, that was a streamline. Back then they called it a streamline. They were first time home buyers and they weren't even 21. And I remember that because I remember thinking at the closing table, they can't go out and get a drink, to celebrate this huge accomplishment. And when they came to me, they didn't even know what the word mortgage meant. So
Wow.
I thought, my goodness, if I could teach these guys how to do a 203K, I could do this for anybody. And the rest is history.
So, what did the impact like? And I love this story. What did the impact of finding your specialization in renovation mean? In those following years, you go from the $11,000 W-2 to it had to have made some sort of impact in the specialization, right?
Yes, I will honestly say I've never been a high producer. I've never been one of those super high producers, but during that entire housing crisis, so I had learned Reno leading up to it. And, through all of those years, my husband and I felt kind of bad. We were buying new cars, we bought a new house, we were eating steak and lobster for dinner. Like we were doing pretty great. And I'm just watching everybody else around me struggle. I'm watching, guys that have been in the industry 20, 30 years losing their houses, losing their businesses. And just having that particular skill kept my foot in the door with all of these real estate agencies. And so I did a pretty steady business even through all of that downtime. I always say renovation lending has fed my family well. It's been an incredible lift for my career.
Is this something that you would recommend to others? Is to consider, the specialization, right? You hear people that, hey, I'm a HELOC expert or construction specialist, renovation. Is it for everybody, or does it kind of require a special person to get involved with renovation loans?
It is not for everybody. I do highly recommend it. And not just for loan officers, but I think processors as well. It's really hard to find good quality renovation staff. We're a dying breed. So if
Mhm.
you can add it to your repertoire as a loan officer, great. No, it's not for every loan officer, but it's a wonderful asset, wonderful tool in your tool belt. If you can learn that skill as a processor, that's job security.
Yeah. Well, what makes a good renovation expert?
I think you have to be a little bit of a self motivated individual. You're probably not going to find a lot of support out there. You're going to have to educate yourself. It's what I did, and it hasn't gotten a whole lot better since. You need to really understand the HUD handbook, Fannie Mae selling guide, Freddie Mac selling guide. You're going to have to know where to find your guidelines. You're going to have to be motivated to research them, to understand them. And then you're going to have to be a little humble, right? Because you're going to make a few mistakes along the way. And those first few deals are going to be learning curves for you. I'm a huge proponent on being transparent. We all started somewhere. So you
Mhm.
don't have to act like the expert from day one. You just simply tell your referral partners, look, I'm starting something new. I've not done this before. I might make a mistake here or there. You're going to have to bear with me, but we'll get you to the finish line. You're going to learn right alongside me. But I promise you, if anything goes wrong, you'll be the first to hear about it and just be transparent.
Oh no, that's awesome. How is, you mentioned referral partners, right? And I think, different real estate agents that are out there as being kind of like a great primary source. And I imagine there's others. How do they perceive, the renovation loan programs and 203K loans, when you pitch this to them?
I think it's changed a lot. When I first got into this business, 203K was a four-letter word in the real estate community. But nowadays, I'm finding most people, they have no idea these programs exist. And 203K is just one of them. There are many others, right? Conventional, obviously the two FHA programs, USDA, VA. And when I talk to agents now, they almost don't believe me. In fact, if I find a fixer upper property on the market, I drive past it, or something happens to cross my desk, and I reach out to the listing agent, they feel like I'm lying. Like they don't believe me that you could do this. People just it's just I think the mortgage companies, the mortgage industry is best kept secret. It's just not something that everybody knows about anymore. So I'm not really running into that stigma that we used to
Mhm.
run into. I'm running into sheer just ignorance. I don't mean that in a bad way. I just mean that they just don't know what they don't know. So nowadays, it's more about trying to convince them these are real programs. They really exist. And, we really can do them. I've been doing them for over 20 years.
And why isn't every mortgage a, 203K? Why doesn't, even when you look at the limited version or the smaller scaled back version of what you can do in the smaller amounts, why would you not want to include some sort of small thing that needs to be done like every single time? Why not?
I don't know. I mean, I think if you've got the cash, there's no reason to.
Mhm.
If you can afford to buy a house and pass an appraisal and you've got plenty of cash to do the repairs yourself, then great, great for you. That works for you. But if you're, we come out of some of us, we come out of that housing crisis, right, with a different perspective. And I remember back then, we were putting people into houses literally had $5 in their bank account. I remember writing some of those loans thinking I would never lend money to this individual, but you couldn't say no, right? You get in trouble if you say you can't deny the loan. If they qualify, you got to give them the loan. And then every year I'd call them on their anniversary. And so many of them, even by then, were already going through the foreclosure process. So that's the historical reference I have. That's my experience. And so I come into new transactions today with that in mind. Cash is king. Retain as much of your cash as you can. I have a completely different perspective than I had, when I first started the business. And my perspective is if you're a first-time home buyer, we want to protect your nest egg. Even if you have the cash to do what you think you're going to want to do, if you're a first-time home buyer, you have no idea what it takes to own a home, the maintenance involved, the repairs that are required. It's not cheap, and so why not roll all of that into a 30-year mortgage, amortize it over 30 years, keep your cash for an emergency, because trust me, you're going to need it, and protect that nest egg. And I'm with you. These programs are extremely versatile
Mhm.
and extremely useful.
Well, you mentioned something, a little earlier about driving by a home and then calling the listing agent. I know where you're going with that, but for those that are listening, like what makes a good, kind of prospect home? Like, hey, wow, that one's being listed for sale. It looks like it needs some work. Like, why reach out to the agent? Like, what's the point out of all of that?
Yeah, I almost this is the Reno challenge, right? Next time you drive down the road, try to count how many houses you see that need some work. You're gonna forget how many you counted by the time you get home. I mean, there's so many of them that need work to be done. And here we are. We've got a solution that can help a seller move a property without putting any money into it. We're all facing high inflation. People are struggling economically. Sellers, may not have the bandwidth to be able to repair a home before they put it on the market. If they did have the bandwidth, they probably wouldn't have listed their house in that condition, right? So, we're helping a listing agent to move a property. We're helping a new home owner or a family move into a property. We're beautifying the property. That all rolls into community revitalization. And then something, because I'm such a numbers gal and I get really excited about lower payments. If I can get you into a house cheaply, I'm more excited about that than I am necessarily the paint color on the walls. So something that I underestimated is the home buyer's joy at being able to pick their own finishes. So they get to decide how they want their house to be, what they want it to look like, what cabinets they want, what countertops, the paint, the flooring, etc. To me, a floor is a floor is a floor, right? I'm more interested in the mortgage payment, but and economical stability and setting you up for success financially than I am about the look of the thing. But honestly, I'll tell you, the families that we've helped, they are more excited about the way their house looks and showing it off to their friends and family than they are about the equity gain, that they got in buying a fixer upper.
I just think about, the opportunities, and I'm curious, how many relationships that you've been able to form over seeing a house being listed for sale, pitching the whole, hey, this would be a great prospect for a 203K loan. This would be a great opportunity for a 203K loan. And just simply being helpful in educating that agent that's selling that home. How, are they pretty well receptive to that information? You said that they're in almost disbelief, but how has that helped you just meet a different agent and help educate them and bring value to that versus you just can't do that on every property. You can't just reach out and call them like, hey, you got a preferred, lender you're sending your business to. Like that pitch gets old versus you have
Right.
something actually bring value to their situation.
Yeah. I'll say it's just like any other sales. It's all a numbers game. So sometimes you get them, they pick up the phone. A lot of times they don't. They don't recognize the number. Who's picking up a phone, a phone call on a number they don't recognize? You'd think it would be different for agents, right? But it isn't. So we get a lot of voicemail. And I'd say it's a multiple pronged approach. So, I'm calling them, I'm emailing them, and then I'm putting them on my milk route, right? Which is when I'm out visiting offices. So I know who I want to ask for the next time I'm at such and such office. They're on my radar. So it's a multiple pronged approach. Sometimes I'll even drop something in the mail just to
Mhm.
try to get them to pick up the phone. But once you get them on the phone and you have that conversation, their minds are kind of blown. Like they honestly don't believe it in the beginning. And then when you explain, yes, I can do this, it is a conventional mortgage, it's an FHA mortgage, it's USDA, it's whatever it is, we can do this. They're all on board. Then you've got opportunity. Some of the most successful approaches I've seen are, and I can't take the credit for this because it wasn't my idea, but putting the loan officer's contact information in the agent to agent remarks,
Hmm.
or completely changing the way you market a home instead of cash only, which we see all the time, right?
Mhm.
See that all the time, cash only. Well, that's not true. They can totally obtain financing. It's perfectly possible. So they changed the way that they market the home. And on the public comments, will make some sort of a note: renovation financing is available. This property is eligible for renovation financing, something like that, as opposed to cash only, seller unwilling to make repairs, as is, handyman special, the normal keywords that you see. So that they'll change the way that they market that house. And maybe you can get some signage in the yard. There's all kinds of things that we can do. Today's the day of social media. You do
Uh-huh.
some walkthroughs. There's plenty of opportunity there. That's social
Deals.
media gold mine. Yep, social media gold mine. So lots of things we could do to get some exposure on those properties.
Oh, that's awesome. Well, now when you see these properties that are for sale, are there certain characteristics that you're looking for that just say, hey, this would be a good home to renovate? It needs a new roof, or you're like, hey, they'll never be able to qualify. You think of like the minimum property requirements, right? Like,
Yeah.
are those floating through your head and you're going like this, if they just did this, this, and this, they can qualify for an FHA loan and that would be amazing. Like, is
Yeah,
that
sometimes, I mean, like you said, you just drive past them and right away, just looking at the thing, that it's going to need some work. But in other instances, if you can get your hands on a list of aged houses, anything that's been on the market for 60 days or longer, that's probably going to be pretty telling. There's a reason why it's sitting on the market that long. So sometimes it's not so obvious. I try to get in front of not just listing agents, but selling agents too, and even home inspectors, because home inspectors are on the front line. And if a deal's going to fall apart at home inspection, they're obviously the first to know, right?
yeah?
So if you can get in front of home inspectors, selling agents, and listing agents, then you're going to want to be targeting those deals that are falling apart at home inspection or appraisal. I've seen probably more of them in the last 3 or 4 years than I have historically, where you've got some would-be renovator coming in, and the whole lipstick on a pig, just slapping on some cosmetic stuff, and they're completely ignoring the structural deficiencies. And I'm seeing more and more of this. Something's on the house, or I'm sorry, something's on the market, and it looks fantastic, and then it goes through the home inspection, and before you know it, you got a $60,000-$70,000 foundation issue nobody bothered to tell you about. What are you going to do in a situation like that? So to your point, sometimes you look at a house, right away, this is a candidate for renovation financing. Other times it's not quite so obvious.
Well, and that's really helpful, as we think about like what the property needs to, the profile of the property needs to look like. Now we kind of introduce the borrower, now we introduce, a contractor, the HUD consultant. We think about the all kind of the ingredients that go into, a successful 203K loan, right?
Yeah.
What are some of the things that people need to watch out for, kind of as they're putting together a renovation loan, or some red flags of like, hey, this is probably a good fit or not a good fit? How do you think about that?
Well, we kind of rely on the agents a little bit in terms of determining whether or not there's going to be enough value, enough equity to get this job done. So as a selling agent, if you're entering into a transaction like this, then you're going to have to do two sets of comp searches, right? One for your as is value, so you know what to offer, you know how to guide your buyer what to offer, and then another set of comps for subject to value. And then from that, we can kind of determine, is there going to be enough equity to get this job done? And sometimes, they can determine right off the bat that this house, there's just not enough. We'd be over improving the house for this area. It's just not going to work. Other times it's really close. Whenever it's really close like that, and you're just not sure if you're going to hit value, I always recommend going FHA 203K because you could use up to 110% of the property's value to structure your loan. So if you are worried at all about hitting value, FHA 203K is the way to go. Other times we know we're going to be in the clear. My career average is about a 14% equity gain. So most of the families that I'm helping, and a lot of them are first-time home buyers, and they're borrowing their down payment from family, usually from parents. And for whatever reason, most of them tend to be conventional buyers. So I do a lot of the Fannie Mae home style, 3% down, gift from family. And then we buy a house at a bit of a discount because it needs some work. You throw a little bit of money into that and you walk away with a 14% equity gain plus your 3% down. So you've got at least a nice, 17% equity cushion there. Maybe by the time that the project's done, in a normal market where rates aren't, or in a healthy market where rates aren't going sky high overnight, you could potentially refinance once the project's done and get out of mortgage insurance. That's what we're always looking to do. And
Wow.
yeah, amazing value proposition, right? Amazing. But in terms of red flags, if you're so not having enough equity would be one of them.
Mhm.
It's up to the homeowner or the home buyer to find a contractor. We don't recommend contractors. So if your contractor's not showing up at the time he said he was going to show up, if he's not returning calls, he or she's not returning calls, huge red flags, right? I think part of the recipe for success is cooperation. And if the parties aren't cooperating, we've got trouble. And if they're not showing up in the beginning, how are they going to
show up at the
be?
end? Yeah.
Yeah. So probably time to move on. If they're not returning calls and you're not showing up to appointments and they didn't get the bid to you when they said they were going to get the bid to you, that would be another red flag as well.
But you mentioned like, hey, we don't refer contractors. Why is that?
The liability. Sometimes you've worked with someone for years and they've been consistent and dependable, and you know that they're quality, and then they have some sort of life event, and before you know it, everything's changed. In other cases, what is acceptable work or quality work to one person may not meet another person's standards. So you don't want to be, as the lender, you don't want to be the one responsible for having referred a contractor in case things go sideways. You don't want to end up involved in any kind of lawsuits. Too much
That's when you
liability.
get the phone call and they say, it's your contractor, Jennifer,
That's
not
right.
my
Yeah.
contractor.
Yeah.
Your contractor's failing me and not showing up, not my
Yeah.
contractor.
Yeah, we've learned the hard way.
Yeah, it's very true. Very, very true. Well, when you say, hey, they haven't identified a contractor yet, what are some of the resources or what's kind of the go-to method to help them go find one? Most people don't
Good
know
question.
a good contractor. Like, how do they go to Google?
Good question. So we can't give them names of contractors, right? We don't do that, but we can point them in the right direction. So NARI is a good organization, remodelers organization nationwide. They have local chapters. I always like your local builders association. They typically have a remodelers council. That's a good place to start. Just call them up. Everybody knows everybody. They'll tell you who's who. I like the idea of calling your local building department or zoning, not zoning, but permitting, building or permitting departments. They're going to know who's doing quality work. Maybe your agents know, your real estate agents may know, and this might get a little dicey, but even the listing agent or the seller may know some contractors that they've used in the past. A lot of people overlook homeowners insurance agents. They deal with contractors all the time. That's a wonderful resource for referrals. So we'll give them a list of ideas on where they can search, and it's up to the homeowner, home buyer to do the searching.
Yeah, that's great advice. Great advice. Now, you mentioned earlier about, you're kind of going back and forth between, home style and 203K. Do you got kind of a favorite that you kind of lean towards? Like, yeah, I'm really preferential towards this because X, Y, and Z, and or this one has these benefits. How do you think about that?
Yeah, I do have a favorite, and it's neither of those,
Ooh,
surprisingly. Yeah. My favorite is the USDA renovation, and very few
really?
lenders offer it. It
Nobody,
may
nobody knows about it. No,
not,
nobody ever knows about USDA
yeah,
renovation.
most underutilized program available, I
Yeah.
think. And I love the idea that you can go out, you can buy a house, and you could do this on a regular USDA if it appraises out high enough. You could roll in your closing costs and prepaids, but let's just say you're a first time home buyer and you go out and you find a house and it's in USDA eligible territory, and you can roll in the costs to renovate that property, to improve that property. So now you're financing the purchase price, the renovation costs, and if the appraisal comes in high enough, your closing costs and prepaids. So essentially, you're getting into a house for the cost of a home inspection, if you want one, always recommended, and the cost of an appraisal. And to me, I just think that's an amazing, amazing opportunity for first time home buyers.
That's unbelievable. Yeah, I didn't know you could do all of that, but I just knew that it was a killer program. There's not a lot of when I think about and I compare everything visually, I think of, hey, the HUD handbook and the 50 plus pages of do's and don'ts, and it gets really complicated, and some of it has a reason, some of them doesn't have a reason.
Yeah.
Fannie Mae, Freddie Mac, seller servicer guides, you go through that a little bit more common sense, push back on the lender to be responsible for that. Less instructional, but more kind of guidance, right? And then when you think about USDA, it's, hey, they give a lot of control to the lender to manage the best practices and ensure a positive outcome. And that's
They
what
do.
I really, really like
Yeah.
about the USDA program.
Yeah, they mirrored it a little over the 203K, the 203K programs, but to your point, not quite as intense.
Not quite as intense. Not quite as intense. Which one would you, recommend to like a family member? Like, does it depend on the person's circumstance, and is that how you kind of make the decision, or do you always try to pursue one of those channels?
I think it really depends on the credit package. So if
Mhm.
you've got very, very generalized here, but if you've got a conventional buyer, you're going to put them in a conventional renovation loan. If you've got an FHA buyer, you're going to put them in an FHA renovation loan and so forth. However, there are instances where the project itself demands, one program over another. So for example, on the Fannie side, they've got that 75% cap on
Mhm.
the renovation cost. So you might hit that on occasion. And in that instance would be an opportunity to put a conventional buyer in an FHA program. Maybe wouldn't have been my first choice, but if it gets the deal done, it gets the deal done.
Yeah. Well, we've talked a lot about kind of like the property and the programs and stuff like that. When we think about a lender adopting this program and building out a renovation department or renovation programs, multiple of them, what we've seen uh, a lot of different situations where they've taken different approaches in building out a program in house, and a lot of successes, a lot of failures. Some think, hey, this thing can go on cruise control and we'll just add the program but not have any kind of product ownership to it. What makes a lender successful having renovation programs as part of in their tool belt of loan offerings?
Are you asking me about my secret sauce?
Whatever you're wanting to share,
Yeah, yeah, no, it's fine. When you think about a sauce, a good sauce, it has a lot of ingredients,
Yeah.
right? So, to answer that question, I would say there's not really one thing that you can apply across the board, but it's a combination of things. Something that I've seen with successful shops is that there's buy in from the top down. If you don't have that buy in, you're going to struggle all the way through, because rolling out these products, that impacts every single department or division within your company. The obvious ones like product development and secondary and post closing shipping, but really every single department. Of course, your marketing department, right? But you've got to train your loan officers, you've got to train processors, you've got to train underwriters, your disclosure desk. The disclosures on these loans are not easy. They come with some level of complexity. So you've got a multitude of training that needs to happen. And I see some shops, or have seen some shops, where they train one processor or one underwriter. I'm never a fan of a single string operation. You always want to do at least two or more. And that way, if something happens, if they get sick, they're in the hospital, they leave the company, anything happens, your whole operation doesn't come to a screeching halt.
Mhm.
So definitely train, more than one person for each job. Those are a couple of things that I would recommend. I'm also not a fan of this idea of separating the renovation package from the credit package, treating it like, separation of church and state. I'm not a fan of that. I'm sure there's always an exception to every rule. I'm sure you can point to some shop that does it very well, but as a general rule, that is not going to work because the left hand's not talking to the right hand. There are too many cooks in the kitchen. This is when you start having troubles where information is not being communicated between the borrowers and the contractors and the consultants, and everybody's not on the same page. Or even something more simple than that, it could be there's a change in a 203K calculator or maximum mortgage worksheet, and that doesn't get communicated to the credit processor. And then they don't know how to restructure their loan and their LOS. And then before you know it, you've missed the window for the COC, the change of circumstance, and you didn't redisclose when you should have redisclosed. And to me, there's just a lot of havoc in trying to separate those two. I'm a huge fan of having one credit processor. Those are just a few things I could think of.
The scope of the renovation changes for some reason, and the appraiser needs to go look at it again and see if the value changes. And the value, like there's an intertwined relationship, right? And
Yeah.
no, it's super interesting. And the one thing that stands out that you didn't touch on is just the platform configuration for your Encompass or Path or whatever loan origination platform that you're on. The effort that goes in that from an administrative capability of making sure
Yes.
that hey, it's going to build out the right or request the right doc package, and you're getting the writer to the deed of trust in there, and the renovation loan agreement is all populating correctly, and the
Yes.
fields are all uh, you know, uh, calculating. I think the
Cash to
one that's
close.
always
Yep. Hmm.
interesting was the Encompass workaround for when you needed mortgage insurance to apply a
Hmm.
mortgage insurance with 3% down,
Hmm.
situations, and you had to do this little. They have the documentation on how to do the workaround, get the calculation, save the calculation, update it to apply the MI, then you go in and repopulate the appraised value. Like those kind of things are always the interesting pieces.
You're
Now,
spot on, spot
uh,
on. Something we didn't talk about is the importance of having a point person overseeing the program. So whether you're outsourcing that or you're bringing somebody in-house to do that, I think it's incredibly important to have one person overseeing the program. That's when they can see gaps in production.
mhm.
If you're trying to identify one person, like the head of underwriting or the head of processing, nobody's there to pull it all together to see, okay, well, I'm starting to see some hiccups here in post closing. Let's identify where did that happen and let's solve for that, before we get to that point. It's really, really tough if you don't have one person overseeing the whole project.
You gotta have I would call this person the product owner, right? They're serving this product owner role. And that to me is probably when I get asked that question, what's the one thing that helps lead to success? You got to have somebody own this that not only owns it, but they can't own a bunch of other programs, and they've got to be passionate about what they're doing. So if you don't have that passion component where you really care about the renovation product, it's you're destined to fail. Don't even start. I would tell somebody, don't even start putting together a renovation program if that is not your intention to be looking for and to make sure it happens. But having that product owner with that has the love and the time and wants to go help people with those programs. Otherwise, it's people aren't getting the support. Doesn't you're going to have issues, and and that's And that's sad. That's if you can't be successful in it, everybody's going to spin their wheels, and people are going to get frustrated, and you're going to piss off, somebody in the organization, and somebody's going to get the phone call saying you screwed up my loan or I lost my house, opportunity because of this. And, it's not what anybody wants to hear.
And make sure you vet that person,
Yeah.
not a former loan officer who specialized in renovation lending and sold themselves as the renovation guru. I mean, you're going to want somebody who's had their hands in every part of that assembly line from start to finish, who's got the knowledge and the experience to back it up.
Yeah. And I think if we could underline and put in bold words, that part of what you said is so important. Check references, investigate the person, because that's another thing. You do see a lot of people join an organization, start a program, load them up on the product world is called technical debt, right? Load them up on this future debt, right? And I say debt in the term that, hey, you're going to have a bunch of issues that a smart person can figure out that are happening right now that you got to pay for down the line. And that means you're closing loans that shouldn't be closed. This person, and especially if you set the compensation on production rather than outcomes. Those are that's some word to the wise if you're looking to do this. But it's we kind of see the same characters, I guess, pop up here, and hey, they're there for almost 2 years, and all of a sudden they got to go to the next place because somebody's going to discover the mess that they're creating, and
That's right.
then they go do it to the next. And it's really sad to see companies invest at that level and make these commitments, and only to find out down the line, and then all of a sudden the board and leadership is, hey, we're getting out of this because, we're having too many problems. And that is not the way to do it. We see it all the time. Too much.
We do. Yeah. Yeah. They ruin it for the rest of us.
They ruin it for the rest of us. Well, if there was one thing that you can change, aside from that, if there's one policy, guideline, program, process, you name it, one thing that you can change about any renovation loan program, that you can imagine to make it better, what would it be?
Boy, I'm going to stick my foot in it here. I'm going to get myself in trouble. If I could make just one change, if that's all I was limited to, then I would say, it's time for us to retire the requirement for a HUD consultant on the 203K loans. And I love my consultants. There are a handful of them out there that are really good at what they do. And if and when I need to hire them, I will. But for HUD to demand or require that I hire a consultant on their terms, and then not provide the training and the support to make a nationwide network of consultants available, good quality consultants, really limits what we can do for the general public. Consultants are another dying breed. They're aging out. I don't think there's any secret to that. There just aren't enough of them nationwide to support the program. So I can't offer it in areas where I would like to. Got a gal in Texas. She would love to do more of this work. There's a ton of opportunity available to her. Nearest consultants are 3-4 hours away. It's just not feasible for her to do. We've got one right now that's in the pipeline. We're struggling. We're struggling to find somebody to accept the job. So HUD kind of handcuffs us when they require us to use a consultant. And quite frankly, the stronger lenders who know how to do renovation lending probably don't have to use a consultant in most instances. We're not using them on the Fannie side. There are other instances where we're not required to use them. So why? And not just the coverage that's an issue, but the expense. We keep talking about affordable housing and junk fees. And I'm not saying a consultant fee is a junk fee, but what I'm saying is there's such a microscope on the cost for originating a loan. And then you've got this huge expense. This is not a small expense. And you're adding a ton of extra time. That costs the home buyer, the homeowner, right? And then HUD, sent out some potential changes, some proposed changes, and the bulk of them focused on increasing the consultant fees. It's like we're heading in the wrong direction. We're supposed to be making houses more affordable,
Mhm.
right? So if I could change one thing, it would be that.
Yeah, no, I think you and, most lenders out there were really surprised after seeing all the feedback, and kind of I think the themes with the public feedback that they got, especially from lenders participating in the program, echoed, your statements there. So when HUD came back and said, "Hey, we thank you all for submitting this feedback, and hey, here's where we're going with these changes," I think, myself included, I was really surprised to see that out of all the feedback that was gathered and all the things that were in there, what came of that was, there were a couple, good nuggets in some of the suggestions that they were proposing, but I was really shocked that they didn't deal with the bigger themes in there. HUD consultant availability, options other than a HUD consult, using other professional firms, being able to have that house, that expertise in house. I'm always, shocked at the statistics around when you compare home style success compared to 203K success. Why do more home style loans get completed without issues compared to 203K loans that actually have this HUD consultant, on there? And I think there's great HUD consultants, and I don't want anybody to take this as a bash to HUD consultants. I think the criticism is to, FHA, listening and digging into, what's really happening on an FHA loan. I think there's my biggest, gripe is I don't like how HUD consultants are. I think there's this pressure level to the HUD consultant that, hey, rubber stamp this budget that we already got in your $1,000 feasibility, work write up. And it's like, well, what was the point of all that if you're just
Mhm.
rubber stamping the budget that happened before you did the work write up? Like, but then you're going to charge $1,000 for the work
Yep.
write up in a feasibility study for this, and then,
Mhm.
you know the HUD consultant not getting involved in reviewing the contractor's qualifications, I think, is another lost opportunity in all of that. Making sure that they're capable of doing that. That's where most of the risk lies in the project, anyways. But I think there's some criticism there that could really help the program take off. And I was just disappointed that some of those bigger, broader themes that were definitely frequent in the feedback just were not addressed. And
Overlooked, yeah. You speak a lot of truth.
I know I'm going to get some emails.
We both will.
Yeah, and I think it's just part of the way that HUD operates is more of a hands off approach, and it's interesting that approach is lender, you go figure it out, read the guidelines. I can't tell you how to do it, but then when it comes to the HUD consultant, it's almost like this backward thing. You have to go use this person, right?
Yeah.
But you're still on the hook for all the stuff that happens, and it's just I think it could be just so much better, if they would listen to the feedback.
Yeah. It's an interesting point that you made there too. We're on the hook, right?
Mhm.
Yeah, as lenders, we're the ones that go through all the audits, and we take the fines and we have to buy the loans back if something goes sideways. But the consultants, they don't get to see that. They don't get the benefit of that, right? They're not held to the same standards that we are. So many times the HUD handbook is very, very clear about the consultant being providing an independent cost estimate, independent from the bid. And a lot of times we just see this regurgitation, of what the bid cited. And to your point, it's like, well, why are we paying extra money? Why is the home buyer paying extra money for a regurgitated bid? And the consultant who digs their heels in, so many times we see them post closing. We see comments, there's a dispute. I'm not getting involved in that. That's your job. It's your job as a lender. Or, we had one instance where a deal was going sideways, a project was going sideways, and we asked the consultant to go out there. Nope, I'm not going out there.
I
We just
quit.
need
I
the
walked away.
inspector.
Yeah.
Yeah.
I mean,
Oh, and by the way, I'm done. I'm done.
yeah.
So, as a lender, I can't quit a project, but you get consultants. Nope. I'm too busy. I can't get out there, or I don't like they don't say this, but they're making all kinds of excuses. They're not getting along with the contractor or the homeowner or whatever it is. Wash my hands. You're going to have to find somebody else to do it. It's like, okay, well, we're not in the easiest, this isn't the easiest job to do. You knew what you were signing up for. Why do you get to just walk? Yeah,
Yeah.
so I don't think HUD gets to feel that pain. And I thought it was an interesting comment you made that most of the projects that we have troubles with are the ones that have consultants, because there's a lot of truth to that.
Yeah. When you look at, and I'll kind of elaborate a little bit on that, but when you look at, try to get an apples to apples comparison. So that you'd have to be looking at, home style renovation that utilizes a HUD consultant, right? So you see HUD consultants, lenders that, hey, we think there's huge value in this for some reason. We don't have that expertise in house, so we're going to force the use of a HUD consultant on a home style renovation loan, right? And you compare that to 203K standards that have a HUD consultant on it, and then you compare it to the cohort of home style renovations that don't have a HUD consultant on it, and you'll clearly see the issue rate. And definition of the issue rate for anybody listening is a home or renovation that exceeds the expected renovation time, right? So if it's 6 months, it's 12 months. If it exceeds that time, then we'll count that as an issue. And home style renovation loans that do not utilize a HUD consultant get completed, or more likely to get completed on time, especially dollar for dollar. And it's an interesting dynamic when you think that, hey, we're throwing money at this problem by involving a HUD consultant. There are eyes and ears. They should be able to help get this completed faster, and I've heard a lot of different, reasons on why that may be the case or why that may not be the case. I don't think there's one in there that stands out as why not involving a HUD consultant guarantees better success than involving a HUD consultant. Just in its fundamentals doesn't make a whole lot of sense. But there's other factors that are at play there. And I feel like we're beating up on the.
I do. I know. I was just thinking the same thing. We're really beating up on these guys, but there are some really great ones out there. And honestly, even without the requirement to use a consultant,
Mhm,
there are plenty of times where I would opt to do that.
mhm.
But I want to work with a good partner.
Yeah, what makes a good HUD consultant then? That's a great question here. For lenders that are out there, and it's the lender's responsibility to select. They have to control who selects the HUD consultant, right? What makes when I'm out there trying to say, hey, you got HUD consultant A, HUD consultant B. What are some of the characteristics that we should be looking for in qualifying a HUD consultant to be a referral partner?
Well, let's make the assumption that they're familiar with the HUD handbook and they know where to find it, because that's just going to be your foundation. So I don't know that should be an expectation so much as a given. So making that assumption, I would say, communication is high on the list of priorities. You've got to be a great communicator. And then knowledge and experience, of course, knowledge with the permitting requirements in any particular area, city inspections, that sort of thing. The consultants that have connections with the municipalities, those projects go a whole lot smoother than those who are unfamiliar with that process in their backyards, in their footprint. There are some that are really, really good with the numbers, but they don't have the greatest bedside manner. And although I like them a lot and they can definitely get a project back on track,
Mhm.
I get a lot of friction between homeowners and the consultant just because of personality conflicts. And, that's disappointing. So I think customer service communication are really, really important in addition to the knowledge and experience.
Pick up the phone and call and talk to the HUD consultant before you refer them over to a particular borrower, right?
Yeah, definitely.
And I think those are all really good, even converting those into questions that you can ask the HUD consultant, like, how much do you get involved in a complaint? When you have people disputing, X and Y, how do you handle that? Or somebody doing unauthorized work, I'll say unauthorized, but
Mhm.
unapproved work, what's your approach on all that? And I think all of that makes a difference at the end of the day.
Definitely.
what what I'd say to take that a step further is, as lenders develop these programs, or hey, you may have a great program like you do at Diamond, keeping track of their performance over time. Not only is it obligated in the handbook, but having some sort of documented location to say, hey, Bob's batting 1,000%. We've used him on 20 something projects, and only one, we had some minor issues with, but he came out of that great. Or hey, keeping track of do not use, because this person
Mhm.
just, hey, washed their hands clean and said, hey, I quit. I don't want to work on this project anymore. It's just too much work. The borrower's too difficult. We know whatever the excuses, that we've heard over that situation, but that helps, number one, stay compliant with the handbook. Number two is probably a great practice, just being able to make sure you don't end up in the same situation with a different loan agent recommending a HUD consultant or putting them on that just probably shouldn't be there. Uh, so we're ending the near the end of the podcast, and I think we could talk all day about 203K loans and renovation best practices. And it's just been awesome having you on here, Jennifer. This is part of the podcast. We call it our lightning round, and I'm just going to rapid fire some questions at you, and we'll see your responses here.
All right. Put me in the hot
Ready?
seat.
All right. First question: any books or movies that you've recently watched that you would recommend?
Books or movies. Okay, so I'm going to be really boring because I am currently obsessed with Italy. So I had a couple of recent trips and can't wait to go back. All the books I've been reading, most of the podcasts I've been listening to, they've all been about Italy. So I don't know how that
Wow.
interesting. Even the stuff I'm watching on TV, and I don't watch a lot of TV, but documentaries and things just to try to get a better understanding of where I'm visiting. But before that, don't laugh at me, but you have kids, right? You've got young kids, so maybe you would appreciate.
Yes.
Before that, I was binge watching All Creatures Great and Small, and I love that show.
Really? I haven't seen that one.
Oh, must see with the family.
My kids are hooked on Ninja Kids right now. And I
Ninja
swear,
Kids. I
every
don't even know what that
time,
is.
yeah, every time we turn on the TV, it's like I'm watching somebody else's kids grow up on there. It's like a YouTube sensation. The Ninja Kids, great family, great kids. And I'm glad they're watching that than Power Rangers. But
That's funny.
oh, no, that's awesome. All right. Question number two. Would you ever build your own home?
Yeah, I have a little wish list of all the things I would love to have in my in my picture perfect house.
Oh.
I just haven't figured out where I want it to be yet. I haven't found a place that I would like any more than Indiana. So I don't know. Uh,
Now, would you ever get a construction loan for it?
I would like to think at this point in life I could pay cash for it, but if I was out of my budget, by all means, absolutely every day.
Get the tax. Go for the tax benefit. No, yeah, that's great. Now, have you ever renovated your own home?
Many times over. Yeah.
Okay. All right.
Yep.
Okay. Next question. When we've already done the HUD consultant, so when talking to an originator that is interested in learning about 203Ks, to hey, I'd love to be specializing in this, and we kind of started the program off in this area, what would you say a good interview question to qualify that person of whether or not they should be originating these loans to begin with? What would be a go-to question that helps you determine if they should be doing this?
A good interview question. Well, I'd have to think about that for a minute, but I think the two key things I'm going to want to glean: are they a hustler? Do
Mhm.
they have some hustle? And are they self motivated? Which I think probably go hand in hand, but by self motivated, I mean self educated. Are they willing to self-educate? Because it's just not very feasible to teach somebody everything that I have learned in 20 plus years. Some of that they're going to have to learn. It's going to be a combination of mentoring with somebody else and educating myself. So I would think those two things are going to be really important to discern.
And a follow up to that is, what would you say is a red flag to that same question?
A red flag.
What would be a red flag answer?
You know what? You might ask them, if they're coming from another shop, you might ask them, where's their business coming from? Because if they're lead gen and they're fed leads, it's probably not going to be a good fit.
That makes sense. Well, this has been absolutely awesome having you on the podcast. Definitely need to do it again. We'll kind of arrange schedules, but we'd love to have you on this podcast again. I think we could talk about this all day, but thank you again, Jennifer. Now, if somebody wanted to get in touch with you, hey, I want to pick your brain on an idea, I've got some follow-up questions for you. What's a great way for them to get in touch with you?
I'd welcome those questions or conversations. TheRenogal.com.
TheRenogal.com. So you got a website, TheRenogal.com. What about an email address? Jennifer@TheRenogal.com?
No, no email, but a phone number. Okay. 844-RenoGal.
844-RenoGal. So you actually got the domain name and the phone number for RenoGal. That's absolutely amazing.
At the RenoGal on Insta.
Wow. All right, now I gotta follow you. Thank you so much for being on the podcast. We'll go ahead and post your information up there as well. And I can't thank you enough for being on today.
Thanks for having me, Sean.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.